Hello and welcome to the KPI Institute's webinar, Productivity Measurement in the Public Sector. My name is Andrei Costa and I will be your host for today along with our presenter, Cristina Mihailoae. This webinar is part of a series of free educational materials that aim to enhance the knowledge and know-how of those interested, while also creating a bridge between us as a company and you, our public. The KPI Institute is a research organization specialized in business performance. It operates research programs in 12 practice domains, each linked to a certification course, ranging from strategy and KPIs to employee performance, and from customer service to innovation performance. The KPI Institute continuously builds on its values of best know-how, data and facts, and common sense to achieve its mission of integrating performance as a discipline through research, publications, and, what interests us today, through educational programs such as this webinar. Today, 13 years after the KPI Institute was created, we can proudly say that our products have reached professionals in 5 continents and that our public comprises a worldwide community of 73,000 members online and 28,000 registered companies on smartkpis.com. Today's webinar will provide insight into whether the public sector productivity dilemma can be simplified, and it will be delivered by Cristina Mihailoae, the Director of Research Department at the KPI Institute. Cristina's research activity is reflected by the development of secondary and primary research studies in the area of performance management, such as the annual reports released by the KPI Institute, the State of Employee Performance Management, and the State of Performance Improvement and KPIs Practice. Her research activity is complemented by consultancy projects related to implementing performance management systems in organizations from different industries, for example, financial institutions, healthcare, manufacturing, or the public sector. As part of an advisory project, Cristina developed a performance management maturity assessment framework for governmental entities to enable a third-party evaluation framework of public entities. This presentation will last between 30 minutes to 45 minutes. Please feel free to ask any questions you might have during the webinar, as they will be answered at the end of the presentation in our Q&A session. Enjoy the KPI Institute's webinar, Productivity Measurement in the Public Sector. Now I would like to invite Cristina to begin her presentation.
Hello, everyone. Thank you, Andrei, for the introduction. I'm happy to see that the topic of productivity in the public sector has gathered around a nice community for today's webinar. And I would like to start with discussing a bit about how I came up with the topic for the webinar. It happened that in many of our interactions with clients, and especially in the open training courses that we deliver in the area of performance measurement and KPIs, to have representatives from the public sector. And in our certified KPI professional training course, we talk about the best ways to measure performance at operational level, but some of those principles to select KPIs do apply in terms of employee or individual level. And when we come to discuss about this, there's always the issue of how are we able to improve productivity in the public sector, given its particularity and its, let's say, limitations between strict procedures and limited budget. What I've noticed is that when we're talking about, let's say, modern performance management techniques, such as employee engagement initiatives, gamification, about continuous feedback loops, about using data to drive improvement and base our decisions, in the context of public organizations, it all comes to conclusions like this doesn't apply to us because we don't have the liberty to or the budget to incentivize employees. It doesn't apply to us because data collection would require extensive investment in infrastructure such as software solutions and so on. Therefore, today's topic of measuring productivity in the public sector will go a bit on the soft side of the matter. We will discuss about what KPIs and how the performance measurement can take place from a technical perspective, but I will focus mostly on some solutions that might be applicable in the context of public services and restrictions or limitations of operating in such a context. I've indicated 4 main topics of discussions. We'll start looking into productivity KPIs or metrics. Then very linked to this, to identifying how can we measure productivity is the next steps in the process, such as collecting and reporting on data, where we'll be discussing about managing data quality issues. And the last 2 points of discussions is about how can we use KPIs to create value, to actually drive improvement and learning within the public sector agency or environment. To conclude with acknowledging on the power of targets on human behavior and on the morale or behavior of public service servants. In the end, we have a question and answer session, so feel free to ask whatever questions you have in mind. And also, we're going to have a few interactions. So please engage in conversation, although I cannot actually give you the opportunity to express your opinions verbally, only in writing. By the end of the webinar, I think you're going to have a better overview on how can data collection be improved and how can we use the productivity KPI in a positive sense that adds value for the public sector. I would like to start with taking a few seconds and thinking about your own job and your responsibility as work. And if you were to list down some ideas of productivity metrics for the role that you're having in the organization, what would these productivity metrics be? If you would like to share your answers in the panel, in the menu of this application we're using, you have a chat box and you have a question box. So please feel free to fill in your questions, your ideas of productivity metrics there, and we can address them throughout the webinar. So what are the metrics of productivity for your job? If I'm to think about my activity as a researcher, for example, and talking about productivity, I would think about the number of articles written per number of hours worked. From a more qualitative point of view, I will probably think about the amount of revenue that we're generating per R&D investment. I would think about the number of new ideas per researcher that were generated per research team member. So having all this in mind, if I'm brainstorming ideas of productivity metrics, I can easily spot the fact that when we're talking about productivity, we're mostly looking at productivity as output versus input. I'm looking at how much value or output or impact I managed to generate considering the investment that I'm putting. And when we're talking about optimizing productivity, there are not many options that we have at hand. We're thinking about minimizing inputs, but in the same time, when you're minimizing the investment that you're putting into a process, you are exposed to the risk of getting maybe more productivity, but poor quality. And just thinking simply about the example I mentioned earlier, the number of articles written per number of hours worked. It is a measure of productivity, and I can be highly productive. I can create and write down a lot of articles. But in the end, it doesn't mean that this productivity measure is going to have a positive impact on the department, because I can produce a lot of items with poor quality. And another option of optimizing productivity is about generating more value with the same inputs, which actually might be a much better solution to consider when we're talking about optimizing productivity. Generating more value with the same inputs includes working smarter. Working smarter nowadays, in many contexts, it will lead to including and using more and more technology so that we can do things faster, we can do them with less errors. However, today I want to discuss more about what can we do without purchasing or making investments in this high tech that is available today, and find some solutions that are more, let's say, easy to implement if you are a manager, a coordinator of a public sector agency. You also have here in the slides listed some examples of outputs and inputs that are usually used in calculating productivity. In terms of inputs, traditionally, we look at salary expenses or any other type of operating expenses, either expressed as monetary values or from the point of time investment, hours worked, from the point of staff members, number of frontline employees or backend employees. In terms of outputs, traditionally, we look at how many projects or tasks or request applications were finalized, if we have achieved the strategic objective proposed. But it's also important to look at an output, but if you want more than output, an input, such as citizen satisfaction, in the way that we measure productivity, and we use these productivity metrics to drive our decisions. Here, the same metrics I suggested earlier, and what we can see in the examples provided is the fact that the calculation of productivity in all of the three examples involves one factor, is one type of output versus one type of input. However, we know that the world in which we operate today is much more complex, the tasks, the responsibility we get. And if we're talking about productivity as an expression of our overall efforts, this one factor calculation might not be sufficient to indicate, to provide the overview on how are we performing and whether we're truly productive. Therefore, the other option to calculate productivity is to create a multifactorial equation, if you want. The multifactorial calculation usually comes in the example of an index. I think that's the most easy to describe the multifactorial calculation. It includes that the multifactor productivity relates a change in the output to several types of inputs. So I'm not just looking on one input, such as number of hours worked, but also other inputs. Especially if I'm thinking about a service or I have to deliver a product, there's several types of different inputs, such as capital, labor, energy, materials, services that I need to access. I have included here an example of a finance productivity index, but this is not from the perspective of the organization being productive from the financial point of view. It refers to the financial department, to the operational side. If I want to see whether the finance department is actually productive, I can look at different types of inputs, such as the routine report cycle, whether there are errors, whether special reports are produced in due time, or net cash flow index. So based on numbers of inputs or metrics that I consider to impact productivity, I can create a productivity index. And in most of cases, these metrics included in the index have associated different weightages depending on the importance or the impact they have in producing the final output. The challenge with using such indexes is that if on one hand we can have a better visibility on whether we are truly productive in a certain area in providing certain services, it can also be misleading if we're not using it correctly. And when I'm referring to using it correctly, it would include the fact that we need to be aware on how our index is built, and we need to be aware of the submetrics composing the index and the weightages assigned. Because on one hand, the index productivity can be within an acceptable values. However, the acceptable value, overall value, might be hiding some serious issues that we have, let's say, in terms of accounts payable input quality. So my overall index can be, let's say, 80%, but that 80% can be a reflection of having two submetrics doing extremely poor and the rest of them being highly performant. And I would say that, well, my productivity is good and I'm not able to spot where improvement should take place. To conclude with the different types of calculation, I would say that productivity indexes can be valuable as a tool to monitor and report on productivity, but in the same time, it is important to acknowledge and take a look now and then at the submetrics that compose that index and make sure that we know exactly what are our weak spots and where improvement should take place. What happens in the public sector when we're looking at difficulties related to productivity measurement is that besides the difficulties or challenges related to selecting and knowing what is the most relevant KPI measurement in that specific context, it always arises the issue of difficulties in collecting and providing reliable data. From the interaction that we had with public organizations and also some of the research studies and articles in this area, I've noticed and I've taken out some of the most common issues. Indeed, some relate to what inputs and what outputs should we include in the calculation. In terms of what is relevant to include in the calculation, we must keep in mind that we have to balance what is the internal perspective with what the client or the beneficiary of our services sees. And I'm going to get back to that point to explore it in more details on several slides that will follow next. How do we balance between our perception of what is important and the perception of the service beneficiary? There's also a common lack of disengagement among employees in the public sector. And this is also a topic we're going to address towards the end of the webinar. It's hard to attract and to maintain good talent. It might be very tightly connected to engagement and retention of employees. We're facing many regulations and procedures that are not very complex and actually create more complicated and less productive processes. It's harder to adapt and to change compared to the private sector. Many of the processes might still be manual, so there's not a lot of automation compared to private sector, and the lack of innovation, which I would also tie it very much with the lack of engagement among employees. From a technical perspective of what can we improve in terms of productivity measure, we can improve the way we select the productivity metrics and the way we collect and report on data. Related to what are common issues, I've only selected 3 of them, meaning accuracy, consistency, and timeliness. What can we do in terms of improving accuracy of the data we collect? Regardless of the issue that we have with collecting and reporting on data, any software solution we choose nowadays can solve and significantly improve most of the problems. So I would leave this as my final comment. But in terms of possible solutions that do not rely on sophisticated softwares, I would recommend that accuracy to be improved, starting with a standardized KPI documentation form. So whether you would like to call it a key performance indicators for the department or for the employee, or you would like to call it a productivity metric, standardized documentation forms help create a rigorous process in terms of measurement. It helps with accuracy because regardless of who is doing the measurement, the calculation formula, the recommendations of what to include, what to exclude, the threshold intervals will always be the same. So there should be no errors in terms of how the KPI is calculated. Another template that helps with accuracy is to collect data in standardized templates. So if the initial document as a documentation form, it's simply a reflection of a well-written procedure, the data gathering template is a standardized Excel file in which all sources or data custodians must plug in data as per the format provided. And in Excel, we can format cells so that a certain type of data is not acceptable. We can use some of the Microsoft Excel features to ensure that the file is mostly restricted about the type of data, trying to reduce from the errors that might occur. What also helps with accuracy is developing a data collection process, a recurrent data collection process. And this will tap and improve not only accuracy of data, but also the entire process and the entire data quality issues that might arise, because it creates an ongoing process through which data custodians are accustomed with their responsibility of reporting. If reporting is a one-time event that happens on fast forward because some superior on the hierarchy desires to have a certain report, then every time this happens throughout the year, it seems like it's a one-time event. It seems like it's a project-based thing that we need to get it done as quick as possible and then move forward and forget about it. If we create a formal data processing, a formal data collection process, then all the people involved in this process know exactly in advance by when data needs to be available, and they have the time to prepare. And from one reporting cycle to another, we can see improvements. We can analyze and take some lessons learned from previous experiences and become better and better at what we're doing. Last but not least, accuracy gets to be improved if we have frequent data quality reviews. As I said earlier, if the reporting is just a one-time event or it happens 3 times in a year ad hoc without planning, when we are faced with a situation of providing a report, data quality doesn't really happen. It might not even have the time to happen for that event, or the time allocated for it, it would be quite short. If we have a formal process of reporting, data quality can take place, and it will involve multiple control points to address any issues before data can be used by internal or external stakeholders. We can have data processing or data checks at each month immediately as the data is produced for those KPIs. We can have quarterly checks. We can have even annual audits on the data that is being reported. The type of data and the importance it has, it will dictate the frequency and the in-depth of each type of quality review. In terms of the other 2 aspects related to poor quality, timeliness and consistency, data governance system is helping and contributes significantly to how data is managed in organizations. I've read an article from Wind Shuttle, and you have here an image from of evaluation of SAP modules. We can see, for example, that in the table, for each SAP module of automation, they have calculated what is the average days that were saved when shifting from a different software or manual processing towards using SAP. Now, the purpose of the slide is not to promote SAP as a software solution, but it's to indicate the fact that, okay, through automation, we can get better performance, more productivity, and we can leave employees um, with more time to be creative, to take decisions, or do other added values activities. However, these very popular and strong software providers on the market indicate the fact that data quality initiatives can be successful without a data stewardship or without a data governance, but they will happen most likely like ad hoc tasks, and they will consume a lot of time in that moment. Their recommendations is to create effective data governance systems. And what we see now is that the position of the role of data custodians or data stewards, the development of data centers are more and more popular, because when a responsibility such as collecting and reporting data is everyone's job, but no one's specifically, then it doesn't get done at the quality, at the standards that we would expect. From that perspective, identifying within the public sector agency a responsible person or a team, depending on the size, that would deal on a daily basis with the matters of data collection and reporting will ensure that the way this process takes place is reliable from the perspective of quality and time and timeliness. How can we use KPIs to drive improvement and organizational learning? In the end, it all comes down to whether the monitoring of KPIs is really contributing to how the employee is performing or to how the department or the organization manages to achieve its objectives. And I would like to start with thinking, what is the cost of improved productivity? And by this, I'm referring to the fact that when we're talking about selecting the most representative metrics to measure productivity, most professionals think about, okay, let's see what is the role of this employee or the role of this department, and map down what are the outputs, what are the inputs, and decide what is going to be the productivity measure. But most of us forget to think that it is important to consider productivity also from the perspective of the beneficiary of the service that we're providing. If we're looking at what drives productivity within an organization, there are two categories of items. Some relate to people, some relate to systems. In terms of people, we're talking about country culture. I think we can agree that German cultures are much more audience resultant than Portuguese, Spanish, Italians, and so on. We're talking about microcultures such as organizational cultures. And again, we have seen in the public sector a less result-oriented culture than you would see in the private sector. We're talking about competency levels of employees, but also satisfaction and engagement levels among employees. From the system perspective, the public services structure will influence significantly how productive we can be as an agency. The regulations and procedures, the decision-making structure, even office design, process mapping, automation, ability to manage and to stimulate innovation. All of these can be looked as inputs into our process of being more productive. But the question is, are productive countries better in terms of keeping citizens more satisfied? Because you would say, okay, if I'm productive, it means that I'm producing a lot more value for my clients or for my audience. Therefore, my stakeholders should be much more happier and satisfied with what I'm doing. And if I'm so productive, it also means that I'm doing all of this value for them and they're so satisfied, but I'm still keeping my costs low, so I'm minimizing the investment that I'm doing. However, when we take a look at these two elements, such as productivity versus investment, and here investment is regarded from the perspective of how much of the total employment belongs to the government, and productivity versus citizen satisfaction, we see that there's not such a direct link as we would think. In the table here, we have the ranking of the most productive countries as per 2017. And we can see that Luxembourg seems to be the most productive country, whereas Sweden on the 10th position. So we would expect that most productive countries would have also a very effective usage of resources, therefore a lower percentage of government employment from total employment. However, it seems that the country with 9.9, which is the value with the smallest value among all of the government employment, is not the most productive country. It's actually in the 4th position. And if we're looking at Norway, that is second, ranked second as productivity, in terms of employment, is at 30%, which is the highest value from all of these countries. So not in all of the cases, there is direct link that more productivity means less investment. So in some cases, more productivity can mean more investment. So this is what we need to balance. What is the cost of productivity? If I were to increase my productivity with, let's say, 10%, what would be the impact of the costs that I need to incur to get that 10%? Is it really worthy? And the answer to the question, is it really worthy? It might not be within the company, within the agency. The answer might be outside. We might have to ask the service beneficiaries, right? With the same ranking of productivity, I've analyzed what is satisfaction of citizens. And we can see again that the most satisfied citizens with public sector is Switzerland. Yet it's not the most productive. And if we're talking about the least satisfied with citizens, indeed, we can look at US, and US does rank among the three at the bottom of the ranking, 3 countries at the bottom of the ranking. What we can also see between satisfaction is that it does rank. So if I were to take the 3 countries that are productive, like Luxembourg, Norway, and Australia, citizen satisfaction goes above what would be an average satisfaction among the OECD countries. What we need to differentiate, to decide most probably in the measurement of productivity, is how can we improve productivity, and if that investment in improving productivity is going to make a difference that matters for the citizens. We see in the public sector a lot of investments in technology, in training programs, with the purpose of optimizing public services, but with not much impact in real life, in the customer experience, in how the citizens perceive the impact of those investments. Andrei, can you help us with a poll?
Sure, right now.
I would like to have your opinion on if, from the experiences you had so far, does measurement of performance made employees more productive? Did you feel like the fact that the employee is being tracked and the fact that KPIs are being used has led to more productivity for the employee or within the team, within the department. Take a few seconds and list your answer. I'm quite curious to see what is your experience in this. Because this is again an assumption that we all do, right? Performance measurement should make employees more productive because we're measuring, we see if they have achieved the desired standards or not, and we can take corrective actions, and those corrective actions will eventually lead on the medium and long term to improved performance, improved productivity. However, personally, from my experience, things are not that simple. There's, again, no direct connection between measurement and being more productive. Can you share the screen with the answers, Andrei?
Just a few seconds. People are still voting.
Oh, okay, great. Can we share it now?
Yes, I believe now we can share it. All right.
Well, what I can see is that answers are quite shared. So most of you, like 50% of you, said that yes, to a moderate degree, it does help to become more productive. And 25 said no, it doesn't help, it creates tension. And 25 say it highly improves performance. Well, there is a trick in each of these contexts. In the ideal situation, in which 25% of you have witnessed that it produces more productive employees, is the ideal context in which you do the measurement in the right context. You have the right context or organizational culture in which the usage of KPIs has been introduced in such a way that it has been internalized by the employees, and now KPIs are a way of working, a way of doing things, are part of how we think, of how we work, how we take decisions, and that is great. For most of the cases, like 50% of it, as indicated in our earlier poll, it says that they do help, but to a moderate extent. It's not the sole criteria to generate improved performance. And we also have cases in which they create tension, conflicts, and not the expected results. And again, when it happens to have these negative behaviors, the tension, the conflict is due to the wrong context or due to a defective change management that was introduced within the company. The KPIs themselves, the measurement of productivity itself, it doesn't have a negative impact. But if the tools used are not managed as they should, it can lead to negative results. I wanted to ask this question so that we can start with how can we make KPIs to drive improvement? Well, I think the first thing to drive improvement is to use them in the right way and to create this change management initiative along with it that will enable us to engage employees more into the process of measurement and for them to use the KPI result towards self-improvement, towards the improvement of the team that they're part of. The first thing we can do to ensure that the KPIs we have are the right ones is to define what productivity mean in each context. What would mean in the context of measuring a specific employee? What does it mean in the context of measuring the team effort? Because there will be different things, different metrics that you have to track. And talking about what matters, also consider what matters for the external stakeholder, for the customer. I'm thinking now of a recent example when I took my laptop into service. It was not working anymore, and as I had a warranty, I sent it back to the company that sold me the laptop. They don't have a repairman service, but they are operating with a company that does the repairments of their product. So my laptop is sent for repair. I got it back. 2 weeks later, I had to send it again for new repairs because it was still not working properly. And one of the productivity metrics that can be relevant in this context, in the context of the repairing company, is to basically monitor the productivity based on how many volume of repairs that they're doing. From this perspective, if the measure of performance of productivity is the volume of repairment that you're doing, they will never be incentivized, employees will never be incentivized to actually solve all the 3 problems they noticed on the device when they received it initially. Because if they solve 2 out of 3, and then the same device comes back again, they can count 1 more repair. So they're doing more repairs. It looks like they're being more productive. But my experience as a customer is not really a positive one. So they might be productive in their productivity definition to say so, but for me, as a user of the service, it has a totally negative impact. So we want to make sure that we define productivity in each context and we consider not only the operational side of it, but also the impact on the customer. We want to make sure that the KPIs we select are relevant for that specific moment, for the context, and this goes hand in hand with what I've earlier mentioned. And we want to integrate data in working processes and decision making. If productivity KPIs become a part of everyone's job, to the extent to which it's possible, some of us, through our roles, might have one productivity metric to reflect our efforts in the company. Others might have 2 or 3. But if they are part of how we're working and collecting data on our own productivity and reporting it frequently is a formal process, and it's not a quarterly report we have to do. It's ongoing, it's every day. We manage to engage people at a more emotional level and with much more success than if we keep them as separate and divisioned, distinct initiatives within the department. If they're using this data and if they learn to use this data so that they can improve or they can contribute to improvement for the team that they're part of, they will see the point of these reports and they will no longer feel like this is an additional job additional task that I have to fulfill. They will feel less rejection towards towards tasks that refer to collecting and reporting on data. And also, if they are learned, if they can see how the results collected are helping in decision making, how do they drive decisions? Because I see tons of reports made that never help anyone, that no one ever uses them. It's just something that we have to do for maybe a manager or for an external authority or whoever else asks us to do that, but it's not actually used. If we manage to discuss results and analyze possible causes at the level of an employee, it might simply mean the fact that he's struggling with processing more applications for construction permits if he works in such an area, and it takes him too much time to go through the documentation and to file and to create a full file for each application that he received. If we manage to discuss those, if we track this and we discuss the results and we analyze possible causes with the employee in discussion or with the team, we get to point out the value that is being created from monitoring and reporting. We can use KPIs to drive improvement if we encourage employees to share experiences. If one of the employees struggling with what I said, processing applications for permits, construction permits, there might be a similar position in a similar agency that is struggling with the same issues. Creating these communities of practice or bringing employees together might help them improve their performance, might help them be more engaged into what we're trying to do. And sharing experiences doesn't mean they have to actually do, let's say, site visits or job shadowing and so on. Nowadays, sharing experiences can simply mean a Facebook account that we can create for these people, a Facebook group, sorry, in which they can express ideas and create this nice online learning environment. Last but not least, we should document and track improvements. This is similar to perhaps a lesson learned log, in which we write down from a project that we've implemented, from an improvement initiative we're trying to set up, from a process mapping initiative, what went right and what should have been done differently, so that if there's a next time we're doing something similar, we can refer to that document. It's about documenting knowledge. It's about creating collective knowledge for the team or the agency. Now, all of these initiatives that I talked about seem very fluffy, perhaps to some extent, and if there's something that is actually going to drive the existence of these initiatives, is engagement and leadership. So we do need one person in, let's say, in the public sector agency that is committed to the work and wants to make a change and wants to transform the way things are done in the organization, that can act as a leader and promote all of these initiatives that to much extent don't rely that much on financial investment, but on attitude and on creating a pleasant working environment, creating new rules of working within the team they're part of. The last topic of the power of targets. We know about the power of targets being a positive one. Again, as you said, in many cases, when KPIs associated to a person come with targets, with some standards to be reached, that person might feel more challenged in a positive way to strive and to put more efforts into reaching that target. Well, if that's the happy case, there are many not so happy cases in which targets drive the negative behavior, such as the example I gave earlier with the repairments. If the employee is evaluated on how many repairs he does in a week, he's not going to do a full repairment of my device. He's just going to wait for me to send it back so that he can reach his repairment targets. Negative behaviors are very heavily observed also in sales-oriented environments, but especially in those environments where KPIs exist, but the set of KPIs chosen is not the most effective one, because it's either too much oriented towards quantity, it just looks at the quantitative side, or it's too much on the qualitative side and it doesn't provide information on how can you make improvements in terms of quality, because it doesn't track processes involved to create the outputs of the service or the services. So when there is this imbalance between what we're measuring, it happens that behavior people have, it's not the most positive one. And if in a general sense KPIs should drive more engagement among employees, it can get the opposite as well. And if we're looking to get employees more engaged, there must be a reason, right? I think you've heard recently that there's a lot of talking around employee engagement and a lot of interest in this area, especially in the private sector. We should engage employees in the public sector as well, because there's a strong link between being engaged and being productive. As I mentioned earlier, productivity is a measure of investment. Yes, I can be more productive if I have better technologies, if I have maybe some expensive consultants that can come and can redesign our processes, then redesign offices and so on. However, none of this will be of any added value if I don't have people, if I don't have talented people, if I don't have engaged people to actually use all of these expensive tools in a good direction and with use. So we want to make sure our employees are more engaged, because in the end they will be more productive. And the good news is that I can increase their engagement level without buying them some expensive technology and so on. A research study from 2014 showed that strictly referring to the public sector, employees that are engaged are 4 times likely to stay in their current job, are 5 times more likely to recommend the workplace. And this is also very important in the public sector because it's very hard to get good talent in the organization because you're competing with the private sector as well, with other employers. And least but not last, they're also 5 times more likely to report that they're being very satisfied. And 38% are more likely to have above average productivity. So being emotionally engaged means they want to do a better job. They're constantly concerned about how to do a better job, how to improve, how to make their working processes more efficient and more easy for them. And they're thinking more about working smarter and not harder, which in the end leads to an overall improvement in productivity as a team. Some data from 2016, but we have here listed information for the US, for the US public sector, shows that around 38% of employees working in the government are fully engaged. And there's quite a consistent part of not engaged employees, nearly a quarter. And we can see that engagement levels in all categories are much, let's say, worse than compared to the private sector. In terms of what makes employees feel more engagement, the first rank item is my work. This refers to their responsibilities with receiving feedback, with improving from the professional perspective. And secondly is ranked the organization missions, so the ability to make them feel proud of contributing to the development of the mission. And on third place is the team, the fourth place, my supervisor. So if I'm looking at these 4 drivers, what drives engagement and more productivity for employees, it's mostly about handling better the human relationships at work. It's about creating a better working environment between colleagues and supervisors, and there's also a huge impact on how we manage to explain what is expected from each employee and how is he contributing to the mission of the agency that he is part of. Once he understands how he can contribute and how his contribution is measured, what is the productivity measure in his case, he can take then all of the decisions and the behaviors that he displays can be aligned with what is expected of him. But in many cases, that is not very clear. In many cases, the job description is expected to actually clarify everything that it is to clarify, but in fact, it doesn't. And if you would ask the employee what is his role, and if you ask his manager about his role, you might get 2 different perspectives on what matters in that context. I've listed some initiatives of engaging employees that would not require or that can be implemented within a limited budget. And the first point is what I just said about clarifying strategy, roles, expectations of job performance, and quality of work. The employee needs to know exactly what is the strategy of the agency that he's part of, what is the mission, what is his role, and how does this role being evaluated in terms of quality. And once we have decided, because this indicates what are the terms in which the employee is going to operate, we're talking about recognition. When you get to the point of recognition, because measurement is not going to improve performance, is not going to drive the right behavior unless we have some incentives around it. In the public sector, when we talk about incentives, it's very hard because there's not much room for the so-called financial bonuses that you can offer for high performance or for being creative, innovative, and so on. However, recognition can come in many ways. Recognition can come through an free application, through a free app. It's called I Appreciate, and it can be an app that the entire agency is using. And every time you want to show recognition of good work, we can provide it to this application that enables you to tell people they've done a good job, to give them stars, to give them award results, all kind of symbols that are tracked in one, let's say, personal dashboard that indicates how much appreciation you receive from your superiors or from your colleagues as well. I think sometimes we're forgetting or we're underestimating the power of saying thank you and of public appreciation. Another initiative that should become part of the culture is to ask for opinions, ask for ideas, and support changes. We don't just ask people to get involved into creating a better process, let's say remapping a process or solving a problem. We should also support the changes that they're proposing, obviously when it makes sense and it's for the better, to ensure that implementation does take place. We should ensure more transparency in communication. For example, performance results or of employees should not be, let's say, private or personal. We can share the performance of within the team. We should know within the team what results were achieved by the other members, and there should also be transparency in terms of communicating any issues that might be disturbing or not as desired from the other colleagues. Engagement also increases when the employee feels like he has the environment in which he can further professionally develop. Professional development for many of us means going to a training, going to a conference. However, development can mean communities of practice. We can create among different employees that have the same role in different agencies, communities of practice, and enabling the opportunity to communicate and to share ideas so that within different learning centers, they can actually improve from the professional perspective together. And it's part of what it would be called learning on the job or informal learning. I will conclude the webinar with 3 takeaways. Productivity in the public sector is quite a vast subject, and there are many other aspects to be discussed and going in depth. But I think we should remember the fact that these productivity metrics must be defined by considering not just the operational aspect of the matter, but also what is important for the stakeholder. And if I want to improve productivity with 10%, let's say overall, I should identify where my investment should go, in which area I should strive to get that addition of productivity. And I will do that by taking into consideration what actually matters for the customer in the service that I'm providing. Is it important to be ready in 5 days instead of 10? Or would the customer accept a 10 days lead time to receive a permit or an approval for something, as long as the experience with the public servant was a pleasant one, as long as he received all the necessary information, he was informed, he was counseled, and as long as the output of this experience is of high quality. Because we might try to deliver an output much quicker, and in the end would not have so much impact on how the customer perceives us, because what drives their satisfaction is in some other area. We should make sure that performance measurement is effective, but only as long as we have the right culture and the context in which performance is grown. Otherwise, it's simply going to be of not much impact on productivity or on how people interact. And in the worst case scenario, it can generate conflicts, tensions, and disengagements and frustrations among employees if we don't have the right change management tools for productivity. And in terms of increasing productivity, I believe that employee engagement can be done even with a tight budget. And it would only require, let's say, the dedication of a leader to start such an initiative and be consistent. Organizational cultures don't change overnight. Organizational cultures, especially in the public service, are very tightly connected to a set of rules and regulations that needs to be respected. But consistency can help change something in the way the working environment is operating right now in the public sector. With this being said, I would like to take very briefly some questions. Do you have questions, Andrei?
So as of right now, not yet any questions, but we'll wait a couple of minutes to see if anyone has anything to ask.
Okay, well, meanwhile, if you're interested in our educational programs on how to measure performance, whether we're talking about the private sector or the public sector, I believe that our certification course, Certified KPI Professional, can give you some very good insights into how to select the most relevant KPIs, because today I've only mentioned about one element in this entire complex process about selecting the right KPIs, and that element was related to considering what drives value for the stakeholder, for the external stakeholder. Within this training course, you can explore many other techniques to actually get to the right KPIs for your business. And for those of you who are interested in assessing the maturity of performance management practices in the governmental agencies that you're part of, you can consider our maturity assessment. The maturity assessment is offered by the GPA unit, and on our website of the GPA unit, you have free assessments that you can access. And next week, my colleague Aline will discuss about how these maturity assessments are conducted in the sense of a consultancy project. But if you're curious about seeing and having a brief overview on the maturity of the company that you're part of, you can go on the GPA unit website and access the self-assessment there. It comes in the form of a questionnaire, and once the questionnaire is done, you instantly receive the report with some brief recommendations on weaknesses and strong points for your company.
In the meantime, we've received a couple of questions. So the first one would be, are productivity KPIs different from other KPIs used to track employee or operations performance?
Between the webinar today, I think I referred to productivity KPIs. I said productivity metric at a certain point, and then I just talked about KPIs in general. I wouldn't call productivity KPIs as being a special dedicated category of metrics or of KPIs. I would consider the fact that when I'm trying to build my performance scorecard for the agency that I'm monitoring, I would like to have measures or KPIs that reflect on productivity included there. Therefore, the KPIs that I might be tracking, some of them might reflect on the quality of the service that I'm offering, right? Such as customer satisfaction with the service. Other KPIs that I should be tracking can refer to productivity and can be an unifactorial measurement of productivity or productivity index involving more inputs. I wouldn't split them into these are productivity KPIs and these are quality KPIs. I would keep in mind that when I'm doing the performance scorecard of that department or of the employee, I would like to have some KPIs that reflect on productivity as well. And I think that in most of cases, if we're thinking about performance, what do I want to do? I want to be more performant. It means that I want to be more productive. So inevitably, most of the measures that you would include on your performance scorecard would be, to some extent, a reflection of productivity.
All right, thank you very much for your answer. And the second one was, given the points you have shown us earlier about limited investment productivity, is it really possible to obtain increased productivity with a limited budget or no budget at all, with the main goal of improving the working environment?
My personal opinion is that improvement in productivity can take place with zero budget, but improvement in productivity cannot take place without the engagement of employees. So I would say that a crucial part, a crucial element in improving productivity, it would be to have, again, it depends on the size of the agency that we're talking, but it's either one person that is very engaged and eager to make a difference, and it has the position of leadership, of management somehow, that it can influence and have an impact on how the working environment is shaped. Or if we're talking about larger agencies, we're talking about probably a team of people that have the will to look into more details about all different options and ideas that can be implemented to improve the working environment for the public sector, and to work on retaining and engaging more the current employees, because many of the solutions of optimizing processes come from the people that work every day on the same processes, using the same procedures. Those are the ones that can come up with improvements, which of course might be and need to be further analyzed to see if the changes have a broader impact than simply at local level. But it all comes down to the people involved in the public sector.
All right, and in the meantime, we've received another question. So, what if improvement is related to raising the level of our employees' competencies? In this case, we might need a budget for training. Don't you agree?
I think learning or professional development can take place in many ways. And if I am to envision, let's say, the ideal professional development for an employee, it will require more than just training. Yes, formal training is one part of the learning, but the truth is that we go to a training, and um, studies show that from a training, when the training is done, you mostly remember around 20%, 30% of the information is what sticks with you. What actually makes a difference in improving competencies is what you do every day. So what is very important in training programs, first in successful training programs, is the ability of transferring those 30% into everyday work, so that they actually become something that stays with the employee and becomes part of his knowledge and skills abilities. So training is just a part of what can be um, done in terms of professional development. Professional development can also take place, as I mentioned earlier, by organizing online communities or even face-to-face meetings between people that come with the same interest, are working on similar processes, are working in similar and have similar responsibilities, and they can learn from each other. Creating online communities, especially in the global environment of today, is much more easier, and it can have a significant impact on how the employee develops and trains. Training can also happen in the form of coaching and mentoring. The manager, the team leader, can introduce new instruments into the working environment, and himself can be the teacher to say so, or the mentor on how those tools can be used and must be used. But to create an effective development program, you need to have this supervision to some extent, and you need to have in mind that challenges need to be included in the working environment. We need to challenge our employees to find solutions to problems in case there is not such an environment that already forces you and brings you all of these challenges. So we need to make sure that what we learn or what we want to learn is currently applicable in the working environment, and that there is a let's say a concern about constant learning as a culture. The simple feedback, the fact that colleagues are accustomed to give feedback among themselves, or the manager to give feedback to employees, is a simple tool that does build on the professional development of the employees. But in an ideal development, professional development environment, besides the formal training, there are also other tools. And until we get the budget for the professional, for the formal training, we can work internally with other resources that we have at hand.
Thank you very much for your answer, Christina. And that also expanded our Q&A session, but if you have any other questions, you can feel free to send them on our email addresses, and we'll do our best to answer them as soon as possible. Now, this brings us also to the end of the webinar. Christina, do you have any last words for our listeners?
Well, I would like to conclude that our interest as the KPI Institute into improving productivity in the public sector, into providing tools, techniques, and advice in this area is quite high. So I encourage all of our audience today, if they have any suggestions or case studies, examples that they would like to share, they're free to use my contact details, and we can further exchange opinions and ideas on this topic.
All right. Thank you once again very much for your presentation. The KPI Institute appreciates your interest in the webinar productivity measurement in the public sector. Follow our websites and our social media channels to find out more details and to subscribe to our next webinar, How to Conduct a Performance Measurement Maturity Assessment, which will be held on the 8th of November by Aline Shonda, the Head of Performance Audit Services at the KPI Institute. Also, if you're interested in getting a certification granted by the KPI Institute on vital areas within the performance management discipline, you can explore our scheduled courses on marketplace.kpiinstitute.org. Thank you again for your participation and have a nice day.